We are 3 hours into trading. It is Wednesday, January 27th. Hello, traders. We've got a lot to cover, so let's get started. Market very, very weak this morning. You could see two long red candles closing on their low to start the day. Came and tested the low that we had on Monday. Market was able to find support, but you can see a nice steady drop right back to the low. Now we have another bounce in here. What does this tell me? This tells me that there is some profit taking out in the market right now. There are a lot of nervous jitters. We're seeing some really wacky price movement. A lot of stocks that have huge short interest. We're seeing massive short squeezes, and I'll show you those in just a bit. But for right now, we have the FOMC the FOMC statement coming up in about an hour and a half. I believe that we're going to hear nice, dovish rhetoric from the Fed. They're going to continue quantitative easing. They're going to continue a low interest rate policy through 2022. This is going to calm nerves. Everybody's going to take a deep breath. We're also going to have earnings from Apple and from Facebook after the close. Tech giants tend to keep the market bid strong. Hopefully, we'll see a nice, decent reaction from them. Microsoft announced earnings yesterday, the first of the mega cap tech stocks to report. Awesome earnings report. Stock up today. If we see similar from Apple and Facebook, again, everyone will breathe a sigh of relief. We have Google and Amazon reporting on February 2nd next week. Until all those mega cap tech earnings are out of the way, I think the market bid will be fairly strong. The other thing that the market wants, it's addicted to easy money. Chuck Schumer said if Republicans balk at the $1.9 trillion stimulus plan, they're going to try and move ahead without them. What does that mean? We're going to see a deal of some type. If it's $1 trillion, that's huge. That's on the back of almost $1 trillion approved in December. All this money has to find a place to go somewhere. It's just sloshing around. Well, recently we've seen it flow into some of these stocks that have huge short interest. Let's take a look and we'll go right down the list. I'm just going to go into heavy buying and I'm going to stay in a daily list. Look at this stock. This is GameStop. Anybody that follows the market's familiar with what's going on in GameStop, GSX. Look at these moves. We've been on these. We've been day trading these in the room all day. In fact, for about the last week or so, we've been noticing these come up on exactly this search. 2 days ago when I did my video, I showed you a lot of these stocks. Look at that price movement from $36 to $138 today. Absolutely crazy. This is like a gigantic skyscraper. I'm just going to keep clicking down and you'll get a feel for some of the different names that are out there. STX is even getting in the act today. Look at that baby go. Been on that one. FSLY, Space, SPCE. This stock's going into orbit. Look at that volume. Traded this one earlier today. Loved it. Made a whole $1.80 and then watch the stock run about $10 higher. Absolutely insane. When you get on these, trade smaller size, set your targets, don't look back. You cannot be grousing about $1.80 gain on a $36 stock. So just take what you can, be happy with it. Know that at any moment, someone that bought it at $58 is not so happy because they probably bailed on it at $48 20 minutes later. Very, very volatile trade. Smaller size, set targets, don't look back. That's what I can advise you to do, especially when these charts look like a flippin' skyscraper. MMM, earnings report, really nice price action. Now this one has a good breakout on a D1 chart. I like MMM. I think this sets up really well. You can look to sell an out of the money bullish put spread, keying off of that 177.50 strike price on the notion that this breakout on this volume is going to hold. That might be one decent play for you. CHWY, big reversal, big bullish engulfing candle. Today they tried to sell it early in the day. It bounced right back. Price action like that tells me that this stock has room to run. It has buyers. So it's been moving against the market. BBBY. Look at this move. Another one. I think I showed you this a couple of days ago. Now here's a symbol I'm going to show you. XRT. And there's been a lot of really wacky price movement. This is a retail ETF. Why the heck is it moving up like this? Look at this thing doesn't move like that. It pretty much goes sideways. It grinds gradually higher, except for now you got this going on. And look at the volume. Well, that's because you have companies like GameStop that are in that retail index that are flying like crazy. A lot of these brick and mortar retailers that have been pounded into the ground are catching a bid because of this short squeeze. And if I take a look at a company like Walmart, you got to be scratching your head. How can this retail index be going parabolic and Walmart be down on the day? How does that possibly make sense? Well, a lot of institutional traders are pairs traders, so they will find a stock that is fundamentally strong like Walmart, and they'll be long Walmart and maybe short a stock like BBBY or some of the other retailers that they feel the prospects for growth aren't quite as great. Well, if BBBY runs to the moon, they've got to cover that short position and buy it back in, probably for a large loss, and they're going to have to sell some of their Walmart to offset that loss. That's one of the reasons. The other reason is that Walmart's part of the S&P 500. Right now we had the futures down about 55 points. So you can see nice bullish cross right here. Market continuing to move higher. We have a double bottom low that's in right now. We have a downward sloping trend line about like that. Very, very volatile market conditions. I mentioned this in Monday's video. We had a 60-point drop in the S&P futures, almost out of the gate. So how's the 10P indicator done in all of this volatility? Really well. It always does well. This is all I need to trade the futures. Look at this buy signal right here. Put the crosshair up. There's your bullish cross right there, right in here. Look at that beautiful upside. Here we go. There's a bearish cross right in there. Look at that signal. Look at this signal. This is an anticipatory, a predictive indicator. It took me 10 years to develop. It is all I need to trade futures, but it doesn't stop there. There's a huge advantage to trading stocks. So when we see a big market drop like this, we're going into our relative strength 30 search and we're finding which stocks have been strong relative to the market. When the index comes down and has a bullish cross, this is when we're buying stocks with relative strength. If the market had continued to go down, these stocks have a bid and they would hold that bid very well. In fact, they may even be moving higher. That's our edge. That's our cushion. Market has another leg lower. These stocks will be treading water or moving higher. We can exit, reevaluate, wait for that low in the market, and then join again. As the indicator starts to spike like this, right up in here, I was mentioning in the chat room, folks, this is a time to be careful. Take profits on your longs. The index or the indicator is telling us this is a time to be cautious. You didn't necessarily have to short, but if you wanted to short, there's your opportunity. You get short here. Starting to cross over on the bullish side. Now, typically, for a good bullish signal, we want to be down below the zero line, way down in here. But this is a nice cross, big cross, and you can see how we've continued to move higher. I still think that the market's got some work to do on the downside. We're probably have another little pullback, and then I think sellers are going to take a break into the FOMC statement. Like I said, it's going to be bullish, it's going to be dovish. They're not necessarily going to want to take big short positions into that statement, given that it's probably going to be market friendly. You've got Apple and Facebook coming out tonight. Boy, we need some good numbers from them. Here is the drop dead message for the SPY. We absolutely have to have this upward sloping trend line right here intact. And you can see. Now I connected it to connect the most points. There's one, almost two, almost three. There's one that goes through it a little bit, goes through it a little bit there. Another point that touches. So when you're drawing trend lines, it's important to try and capture as many touches as you possibly can. Those validate the trend line, and you can see how we touched it at the low of the day. We do not want to close below this upward sloping trend line. If we do, it's going to be fairly bearish. Now, for those of you who are members, yes, the 10P indicator does work on a daily chart as well. And I can go through and show you there's a nice cross right there telling you that the bottom is in, runs up, there's a nice short. Yes, the market comes in there. There's a nice bullish cross here. I can use the crosshair tool so you can see where they line up. That's your buy signal. That's your sell signal. That's your buy signal. Now this is a a bullish divergent. That's a bearish cross. And look what happens to the market. The indicator is going down, 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 and the market is compressing or going sideways. That is a bullish divergence, and it tells you that the next cross is going to be a really good one. Cross is right there. Wish we released to the upside, but look at here. We've got a bearish cross up in here. That's telling me this could be a market decline. But if this runs its course, we don't get the breakdown, the next bullish cross that we have down here could be a really good one. And maybe that is where we get our market melt up from that. A lot of money on the sidelines right now. You start adding another $1 trillion, it's going to have to find a home. We've seen the ability for short squeezes on individual stocks that have a huge short interest. Well, if you get enough people short this market on a market drop below this line, that could spark a move in the other direction. Volatility is on the rise. I am long VXX. That's at least going to give me a hedge for any long positions that I might have. You can see how the volatility has started to move higher. Let's go into VXX, take a look at that. You can see it's above the 50-day moving average, big volume. Volatility is starting to increase. Take a look at the 5-minute chart, and there you can see right from the opening, it's been moving higher. Even though the market has found a double bottom, this is still continuing to grind higher. So that's telling us that option premiums are getting fairly expensive. Not fairly expensive, they're still dirt cheap, but they're increasing. So time to be a little bit cautious here. We've got bullish sentiment off the charts. We've got margin lending at dollar record levels. We have the market near an all-time high. We've got PEs of 40. Right now, earnings are going to have to come in super, super good. They have been good for big tech companies, but I think they've been the exception during the coronavirus, not the rule. They've been able to benefit from stay at home. Most of their employees have not missed a beat working from home. And in many cases, that's actually helped these stocks as well. Look at Google. More people surfing the internet, more people watching YouTube, Facebook, social media, people using that, Microsoft, people buying computers, stay at home. So the big tech names have really benefited from what's happened during the course of the last year, but our economy is still floundering around. Very soft. Unemployment is on the rise. That's not a good sign long term. Once these mega cap tech stocks report earnings after Google and Amazon next week, I think some of the air is going to get let out of the balloon and you could see some profit taking. So, more than anything, if you're a swing trader, be cautious, especially if you can't watch the market during the day. I think being in a cash position is where you want to be. We've got 3 bullish put spreads expiring Friday, 2 more a week from Friday. That'll put us into cash. I want to see how all of this settles out. I hope we get a nice market pullback because that's when we're going to be putting out new bullish put spreads, perhaps even buying some calls if that stimulus bill looks likely. We could get a massive short squeeze on the way up for the market, and that might be when we get that buying climax sometime March, April. We'll see how it all plays out. Staying very short term for me works well because I can evaluate price action along the way. So let's see if we can find a couple of trades for you. I showed you 3M. I really like that one on the long side. It's not a short squeeze. It's legitimate. They announced earnings. I'm going to continue to look down the list. Chewy, I like that bullish engulfing pattern that it put in today. Tells me that there are buyers. You had earnings back in here December 8th, so probably won't be announcing until March. You should have a few weeks to get a bullish put spread off on this one. I think that's pretty safe given that massive rebound today. Some of these names you can day trade. SpaceX looks, or SPCE looks really good. But I would not swing trade these overnight. I'm just going down the list. IRM, I traded yesterday. These are all your stocks for the most part that are gigantic short squeezes. Let's see what we've got in Pop Bull. Hopefully there'll be one or two names in here. DDD, these are all, look at this. These are all short squeezes in here. I'm looking for something that might not be a short squeeze, something that's breaking out. Cisco, not a huge mover. I like this little breakout here. You've got almost a cup and handle type formation getting through the upper end here. It's got a little bit of a gap to fill in. That looks actually pretty decent. MMM would probably be the one that I would say you can focus on as far as selling an out of the money bullish put spread after earnings. Take a look at strong after earnings search. There you've got a number of stocks you can take a look at. Let's take a quick look at the bearish side. I know I've got a couple of stocks I like there. Be balanced. Take a look at both sides of the market. Disney was one that came up on heavy selling today. You can see horizontal support has been breached right here. The stock is in the gap. It's right at the 50-day moving average. You'd want to see it close below that 50-day moving average. Then I think it makes a good short down to about the 155 level right there. So I like that. I'm going to click through a couple more, see if I can find another short for you. Boeing, downward sloping trend line, getting through horizontal support right here. It looks like a decent short, but the 100-day moving average is very close, so you don't have a lot of room on the downside. Starbucks, breaking through horizontal support below the 50-day moving average. After earnings, it announced yesterday. It's got room to come down to the 100-day. That's a nice short. See how easy this is to find? Look for the volume. Look for the technical breakdowns. Those will be your keys to success right now. One more, maybe? I'm looking. Not bad. SQ is not bad. You've got a double top formation in here. Breaking through horizontal support, 50-day moving average, 5-minute chart. See if it's got some relative weakness. But it's got a bounce in here. Yes, generally soft. GM is one that I showed you on Monday. I was short that stock. I covered my short this morning. Take a look at the daily chart. I hope some of you took that short. It was a nice one. I showed you how that gap right there was likely to fill, and it has. So this is where it was Monday. Nice follow through. That was a good winner for me. I think that GM has room to come down to this $46 level pretty easily. So GM actually looks like a pretty decent short too. Be careful. Market's extremely volatile. I am long VXX. I'm looking for that volatility to continue and pick up on both sides. So if we do get a big market drop, I'll be able to benefit from that position. I do have some bullish put spreads on that'll help me hedge those positions until we get through on Friday. And a week from Friday, then I'll be in cash for my swing positions. There's a really decent opportunity on both sides of the market right now. You've got excellent shorts, like I showed you, in GM, Disney, and you've got some really nice longs also in the form of 3M. Good luck with your trading. If you like this content, please give it a thumbs up. Make sure to subscribe to my YouTube channel and turn on your notifications so that you never miss these videos. I'll always include some great free trading ideas for you. Good luck. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.